Welcome, ladies and gentlemen, to a new edition of our interview presentation series. Today with Endeavour Silver, and Dan Dickson, the CEO, is here with us. Hey, good morning to Vancouver. How are you?
Very good. Thanks for having me again, Jochen.
Yeah, thanks for taking the time, and I can imagine that you feel quite good because you guys just released some hours ago your feasibility study for Terronera, which we were all as shareholders really waiting a long time for that, and we are now very happy that we have a basis for the calculation and that you guys can really start fast with ordering your long-term items and also to get the project finance done. And the great thing with that is that you brought us a presentation, and of course, let's dive into that. And I would say the floor is yours.
Well, thanks. And you're right. It has been a little bit of a long time coming. Ultimately, we had the PFS that went out in July of 2020, but we've been working hard for the last 12, 16 months on getting a feasibility study done, which gives us a little bit more confidence, probably even a lot more confidence when it comes to the project costs and the project build costs ultimately. And we've been working with a global engineering firm, very reputable wood here, based out of, funny enough, in Coven, a little bit out of Utah, a little bit out of Denver, and a little bit out of Vancouver. So in this world that we live in, it's been a different world, but I know our shareholders have been waiting a long time. We've been working pretty hard at this, and so we're happy to bring it out. And as you touched on, we released it this morning. I did a webinar that's going to be available on our website for the full presentation, but thought it would be good for your viewers that we put up the presentation. I can quickly run through and touch on some key points that are going to be important to our investors and for us. So without further ado, the Terronera project, and we've had some changes, not a lot of changes from the PFS to the feasibility study, but ultimately changes. And we've seen a lot of increase in costs and prices, and that's no different for Terronera. We had a $100 million initial Capex under the PFS for a little bit of a smaller project, a 10-year mine life, 1,600 tons per day. Under the feasibility study, we're 1,700 tons per day. We have a 12-year mine life, higher grade material going through that plant. So we're going to produce 3.3 million ounces of silver and almost 33,000 ounces of gold per year over that 12 years. Ultimately, it comes down to the economics, and using the base case, we use $20 silver, $15.75 gold. We have a NAV of about $175 million, IRR of 21% with a 3.5-year payback. But if you use today's prices, it's significantly better and pushes NAV almost up to $300 million. But
the IRR is after tax, right?
It's always after tax. Absolutely.
That's important to know. Yeah.
We like to pay our taxes, and I think that's good as a corporate citizen. But the biggest and most exciting thing for us, for Terronera, it's going to double our production and cut our cost profile in half. So this year, we're going to produce somewhere between 6.5, 7 million ounces of silver equivalent. On its own, using a 79-to-1 ratio for silver to gold, it'll produce 6 million ounces of silver equivalent at a cash cost of 59 cents using the base case prices.
Regarding the Capex for the whole project, as you said, now instead of 100 million, it's 174 million now, $175 million, I think. And I think you have 125 million cash in the bank, which was the status of the last quarter reporting, and $147 million as working capital. So do you still need, let's say, a large project finance, or can you do that out of the cash flow? Because as far as I read in your press release, this is like 24 months altogether, the payments.
Yeah, and absolutely, we're going to be able to use some of our, obviously, what's on our balance sheet and cash flow. But at the same time, we're looking to leverage our balance sheet. So we have about $6 million of equipment leases as long-term debt. Otherwise, we have no other debt. Of course, we have our accounts payable. It runs about $20 million, but we're in a very strong financial position. But we want to make sure we keep that balance sheet in a position that we can be very inquisitive in the space. We're firmly believe that silver and gold prices are going to go up with what's happening in the macro world. And if we can use some debt to put on the balance sheet to help build Terronera, so somewhere from $80 to $100 million, we think that's going to be better for our shareholders, and then free up capital for other things that might come along.
Super.
This slide that I kind of went to is our base case, and it's the important stuff I touched on. But as I say, from a spot price standpoint, it's a very, very attractive project. So using $24 silver, $1,800 gold, again, you're approaching $300 million in NAV. IRR is 30%. Our cash costs are actually negative. So all the gold, the 33,000 ounces of gold, pays for the 3 million ounces of silver production a year. Life of mine, all-in sustaining costs, you're looking at $1 per ounce of silver over the life.
Why is it MASC?
Because we say mine site all-in sustaining costs. So typically all-in sustaining costs includes G&A out of our Vancouver office. In this case, when we're looking at the project on our own, we don't include that G&A in that all-in sustaining cost. So again, it's positive because ultimately that G&A cost that we're incurring right now for Guanaceví and Bolañitos will now get spread into Terronera when it comes on stream. 5.5 million or 5.9 million ounces silver equivalent to year, again 6. But the other side that's very exciting, and I have a slide later on, is the exploration upside. The Terronera vein and the La Luz vein are both open along strike and to depth. And we identified a number of regional targets that we released almost 2 months ago on surrounding areas, southeast to Terronera, and a new concession we picked up last year called Las Cuates. So again, very exciting, lots of potential. Quick highlights on our feasibility study. We have a new mine plan, a longer mine life, higher production. The plant equipment, we've got quotes. It's a larger plant, 1,700 tons per day, but we've got quotes in the last 6 months because we have seen increase in costs over the last year and a half. Obviously, we've seen supply constraints across the world, COVID issues with regards to start and stop everywhere. So we have got hard quotes on plant equipment. Those increase about 25% from our PFS, and we have contingencies built into that, so we hopefully can build this mine for what we're saying we can build it through the FS, the feasibility study. I think our viewers, and especially your viewers, are pretty familiar with Terronera, and we've been talking about it now since 2015. But again, for those that don't know or don't recall, we are in the Jalisco state on the west coast of Mexico. Our other operations are in Mexico. It's an underground epithermal vein system, and that's what we do at Guanaceví. That's what we do at Bolañitos. For us, Terronera is right in our wheelhouse. The difference is Terronera is going to have a 12-year reserve life. We've been at Guanaceví for 15 years. We've been at Bolañitos for 12. But over that time, we actually never had more than a year to 2 years of reserves. Now, we've always converted because they're underground vein mines, and that's the geology and understanding that geology. But again, we have a 12-year mine life at Terronera, and we think we can be there 15, 20, 25 years with what's there around it. Quickly, I'll just get to this slide on our economics and the evolution. We've been doing studies, as I say, we did a PEA, then a couple PFSs, and just the value creation we've done over the last 5 years. And 2021 Wood Spot Sensitivity puts it as a project that's one of the premier silver projects in our space. There's only a handful that have come to market, and only a handful that have been organic discoveries. And for us, we picked it up for $3 million back in 2013. And as you've noted, been very successful with bringing this to ultimately a construction decision. Again, just the timelines. I won't bore your audience with too much of that, but a slide that we're very proud of and goes to that work that we've done from an exploration standpoint and an engineering standpoint. You can see the growth in our reserves and resources from this side at Terronera over the years that we've held it. So a real significant increase in the silver grade initially, increase in tons at the back end, and ultimately throughout the project's life that we've had it, our discovery and engineering cost is 46 cents per ounce of silver equivalent. So ultimately, a great payback. If we're going to be able to bring out these ounces for about $1.15 over all-in sustaining costs, very profitable project for Endeavour, and again, completely changes the landscape of Endeavour Silver and who we are, what we do, and gives us a flagship asset that we will again double our production, cut our cost profile in half.
So how fast will you do then the real or the final production decision and then the project finance? Would that be all done by Christmas?
Yeah, I think Christmas is actually a very doable timeline. Ultimately, the banks need to see this feasibility study and the detail behind that. We've been uploading that into our data room, getting them through it. If we can get the banks through in the next 2.5, 3 months, that puts us to Christmas, and have that formal construction decision from the board when that financing is in place. Of course, like any board, we don't want to use all our cash and cash flow and get constrained by what our balance sheet is. So we want to make sure we have that financing in place today, or when we make that decision from a construction standpoint. But everything points towards an advancement to a construction decision. We actually approved this week $13 million to advance Terronera from now till December 31st to make sure we're doing the earthworks so we can stay on schedule and complete it in the 21 to 24 month timeline.
Absolutely. And I could imagine that the interest for debt is not that expensive these days.
You know, we live in a funny world. Obviously, interest rates are at all-time lows, and quite frankly, I think we're going to stay at all-time lows for a long time, which is the story behind why we believe silver and gold prices are only going to continue to increase in the coming years. But if we can take advantage of these low interest rates, I think that's going to be beneficial to shareholders. So we think that's the best way to go, and ultimately I think our shareholders will agree with that when we come out with a financing package.
Absolutely.
Slide 14 of the presentation just shows the grade profile. Year 1 to 4 is very profitable for the company, and ultimately that improves our economics. And the La Luz vein, which is on the right side of the screen here, it's a high-grade gold vein that's actually kind of sits about 2 kilometers away from Terronera. We're going to bring a lot of that in, which increases our gold production in the first year. The other thing to take away from this slide is actually the Terronera vein and La Luz vein, the hard cuts. You can see some of the high grade in Terronera down at the bottom. That's our envelope for indicated resources. We have inferred around that. And once we get in and develop that, you can see that it's still open to depth, and it's open along strike to the west, so to the left side of the screen. So lots of exploration opportunity that remains at Terronera and La Luz. Just a quick slide on the change from the feasibility study to the Asanko PFS that we released last year. A big increased initial capex. Again, bigger project, more ounces produced over a larger mine life. We're going to have lower costs from a cost per ton standpoint. But we did see an increase in costs on initial capex. Again, supply constraints, inflation that we've seen come into the industry. Obviously, all the mining companies are making more money and looking at different projects that come online. That's bringing more demand for that equipment, and that's all built into our feasibility study. Again, more detail on this. I'd encourage all your viewers to go through our website if they want to get more detail on this. We have a full presentation in detail. I go into depth on this. I don't want to kill everybody with all that stuff today. But again, here's our breakdown from an operating cost standpoint. All-in sustaining costs over life of project, $3.24 under the $20 $15.75 base case. Under the spot case scenario of $24 and $1,800, you're looking at $1.15 an ounce of all-in sustaining cost, and again, negative cash cost.
I have one question in addition, because I saw in your press release today that you have also, let's say, higher power creation costs, and you want to do that with LNG, so liquefied natural gas. Is it because of the topography that you cannot use, let's say, for example, solar power? Because I mean, you are in Mexico, right? And there's a lot of sunshine. So how did you come on LNG? I found it really interesting.
Yeah, it is actually interesting. First off, there is a power line that goes right through the property that we've been using, but that power line's lower voltage and it gets brownouts. So you've got a lot of communities on that power line, and CFE, the governing body for electricity in Mexico, they're in charge of that. We have looked into bringing a 115 kilowatt line through the property. Bigger poles takes time. We have to negotiate to do that. We'd have to negotiate with about 87 different groups to bring up these power poles through Guadalajara all the way to the project. Naturally, that does take time, and each member of that group that you have to negotiate with can stall and take time, and it's going to be costly. And we've done trade-off studies, worked with CFE on that, and ultimately came to the LNG aspect of liquefied natural gas that's going to be vaporized on site. And there's about 1 or 2 trucks that will come up from Guadalajara a day to refill what we have on site, and we keep storage on site. We are actually using some solar, but it's a smaller portion. So we are using solar power for our camp. It's a renewable resource, good for the mining industry. We're all trying to get our GHG emissions down. and it's going to be good for the community. And you are seeing growth in solar power in Mexico, but it's still got a little ways to go, and we'll use what we can, like I say, for the camp, for the basics. But when it comes to operating the plant, we need a more reliable source, and ultimately more reliable source and something that can handle 8.7 megawatts of power that we need for that plant, 8.5 almost. So the LNG is the best from a trade-off standpoint, but we'll always continue to look at that and see if there's options as we move forward. Because again, the feasibility study is a 12-year mine life. We think we can be here 15, 20, 25 years when it's all said and done. Our operating costs compared to our peer group. I talk about this being a flagship mine. And if you look at it on a cash cost basis over the 12 years, 59-cent cash cost puts us in the lowest quartile amongst all our peer group. From an all-in sustaining cost, again, puts us in almost the bottom decile of our entire operating peer group. So this mine, once it's up and operating, is going to be extremely profitable compared to what we see out there today in the silver group world. Again, after-tax free cash flow, just numbers. I am an accountant by trade. Yoka knows that. But ultimately, once we're in production, base case, we'll have about $40 million of free cash flow. On spot case, today's prices is about $52 million of cash flow once we're in production. Over the life of the project, you're looking at base case, about $311 million of after-tax cash flow and $467 million of spot price after cash flow.
So you might be then a future dividend payer.
We might be a future dividend payer. There's a lot of work left to go. I know we have questions of that. I think we're starting to see a lot of opportunities out there, especially where we think where silver and gold is going to go. But yes, hopefully by sometime when Terronera is up and chugging along and printing cash, we can become a dividend payer. Fair question, Jochen. Again, sensitivity analysis. The breakdown is actually, you can see a little bit difference on this slide. 54% of our production is actually silver revenue, 46% is gold. Obviously, that changes as the ratio of gold and silver price changes. But this is a silver dominant mine. No base metals. That's one thing about Endeavour, even with our other operations. We are silver and we are gold. Right now, we're about 55% silver, 45% gold. So this will continue even when we bring Terronera online. Just some sensitivity case on there with different prices of what the value of Terronera is and what the IRRs would be today at those higher prices. Technical review. Again, I won't kill your viewers with the technical of it, but ultimately it's an underground ramp access mine. We do have the 3 portals. One that will access La Luz. There will be a connection between Terronera and La Luz. We can reduce driving on the surface. It's not going to be underground haulage. We're mining long hole for 60%, almost 60% of the deposit. Long hole mining method is very cheap. Bulk mining effectively underground that will allow us to get it out. There are some areas with ground conditions that aren't as strong that we do have cut and fill. And in La Luz, we'll use a little bit of shrinkage, and there will be some backfill for Terronera. So cemented backfill, paste backfill on long holing, waste rock, and cut and fill areas. But ultimately, I think in the PFS, we had about 30 to 40% long holing. In the feasibility study, we did more geotechnical work to be able to support long holing. And with bringing that long holing in, reduces our mining costs.
Will you use in the mine itself like an electrified scoop train, or how do you do that?
Yeah, so our PFS had a train. We've taken that train out. We are doing it. We are looking at electrified and diesel still. We think we are going to go with the diesel at this point, based on costs. But it's something we always look at. We actually even look at the electrified for Bolañitos. We look at it for Guanaceví as well. But just from a cost trade-off study, we are going with standard diesel. Our mine schedule, and here's one of the opportunities that we feel like is in the feasibility study. You can see in year 1 how much development we do. We went from doing 48 kilometers of development in the PFS to 76 meters of development in the feasibility study. A big jump. Development's costly. Part of it is from a long hauling standpoint. But ultimately, where we see an opportunity is as we take ownership of this property, take it away from the third-party engineering groups, we have internal expertise of how to do this. This is what we do at Terronera, or at Guanaceví, and this is what we do at Bolañitos. All the development for the entire mine life of 12 years is done in the first 5 years. We think once we get in here, we can delay some of that development, bring some of that Capex and put it in years 6, 7, 8, 9, 10, 11, 12. Ultimately improves the economics of the mine life. That NAV can go from the 282 to north of 300, but stuff that we're working on and continue to work on even through the construction stage. Mm-hmm. Our plant flow sheet, it's pretty standard. It's grinding, our crushing, grinding, flotation circuit. We're going to produce a bulk sulfide concentrate. Exact same thing that we do at Bolañitos. It's going to go out from Manzanillo, which is a very short truck drive away, and then ultimately sold into Europe, Latin America, or even Canada. Just a quick overview of the mine layout. You can see the Terronera vein on the right, using that turquoise dotted section, La Luz, there on the left, and where all the mine's going to sit. But ultimately, we'll have access to Terronera through Portal 3 and Portal 2, and access to La Luz through Portal 1, and actually Portal 2 with an underground haulage. Mm-hmm. And then exploration opportunities, and I've touched on this, the fact that Terronera is open along strike and to depth, and La Luz being open along strike and to depth. And you can see where they sit on this boundaries map on the right side of the screen. Las Cortes concessions up there on the upper left side, in green, we acquired in the last year. We've started drilling that. Again, we put out phenomenal results with Las Cortes, and we're going to continue drilling Cortes this year. On the southeast side, Cerro Gordo we picked up. We've drilled that. We have identified 4 to 5 veins, put out some results from those veins. So again, significant upside with these underground vein districts to be able to go and extend mine life from the 12 years, 15, 20, 25 years. We will be here for a long time.
That's good. Like to hear that.
Some upside opportunities, even though the feasibility study is done, doesn't mean we're done. So even in the construction phase, there's always the ability to do trade-offs. The world's dynamic, things change, costs change, new discoveries come out, new innovations come out from a metallurgy standpoint. We think there's opportunity to improve the metallurgy, to improve our gold recoveries. Right now, we're getting very good silver recoveries. We can get better gold recoveries. We'll work through all this over the next 6 to 12 months and see if we can't improve this project from what we've already put out today. Mm-hmm. The timeline, this is often the question, and you touched on this, Jochen, earlier. It is about a 2-year build, 21 months, a couple months in there, almost 3 to 6 months built in there for contingencies for commissioning. But we expect this project to be online for H1 2024. Mm-hmm. It'll double our production. We'll have Guanaceví, Bolañitos, and hopefully Terronera, and maybe even something more as we push through, because we still have Parral. We're working on Parral pretty diligently because we want to bring that into an economic study, hopefully for next year. And then I'll just touch on ESG. I think Endeavour's, for the 15 years that we've been around, we've been great corporate citizens. We've been pillars in our community. We've helped out communities. We've brought a lot of the Canadian, US expertise into certain parts of Mexico from a medical standpoint, education standpoint. And at the end of the day, we think that's an important part. It's a social license to be able to operate in these communities. And sometimes mining has impact, and we are going to be the largest employer at Terronera. We are going to pay north of $200 million of corporate taxes, but we want to be good corporate citizens, operate with integrity, and be good neighbors. And ultimately, we've done a great job with our exploration group in Terronera. We have community support. We have all our licenses. We have all our permits to start construction. We have some amendments to do there, but we expect to have those amendments in hand before December 31st. They're small things. We can start construction without those amended permits, but we want those in hand to make sure that we can build this how we want to build it. Mm-hmm. Environmental, again, always looking to improve it. This is a dry stack tailings. It's what we do up at Guanaceví. So we take all the moisture out of it and we stack it. It's a much safer, much more environmentally friendly form to do tailings. More costly, but ultimately that cost is well worth it when it comes to what we're doing. So I'll leave your reviewers with this last slide. Jochen. The right formula for value creation. Over the last year, as you know, I've moved from the CFO position to the CEO position. So we have made changes at the management level. Brad's still around. He's our executive chairman. I was just on the phone with him right before you and I got on the phone. We brought in Don Gray about September of 2020, who just finished building a mine out in Colombia. Prior to that, he was in Guatemala building a mine. He's been building our team in Terronera. So we're up to about 33 individuals. We'll be about 50 before the year's out. And we think we have the right people in place to be able to build this project on time and on schedule. That's our goal. Realize our Capex is higher than what it was in the PFS, but this is a project that we know we can deliver on. And I think that's very important. Again, we've approved a $13 million budget between now and December 31st to advance the project. So we may remain on track to be ready for H1 2024. And ultimately, it's going to be a quality project. I've touched on this a number of times, but we're going to be the lowest quartile cost producer with Terronera. There's exploration upside, and we have robust economics here at Terronera.
Fantastic. Super. Thank you very much, Dan. That was great. And yeah, I think as we all know, since many years, I want to say already, Terronera is a great project and it's a super game changer for your company. One last actual question. So how was the third quarter for you guys so far? I mean, now it's 9th September. The quarter has only 3 weeks left. Are you happy?
I am happy. I mean, we haven't had any particular issues. Operations is going extremely well at Guanaceví and well at Bolañitos. And ultimately, we did close down Compass this quarter. And I think we touched on that in our Q2 news release. And that closure has gone relatively smoothly. We've moved a lot of people some of them we want to take to Terronera, some we can use at Guanaceví, and some we can use down at Bolañitos. So that's gone as well as to be expected. Silver prices and gold prices haven't been the same the last 2 months. But I think that's just a kind of a lull in a longer term story. COVID's obviously still prevalent. North America and Europe, it's going to be here for a little bit longer. It's unfortunate. I wish we could get through it. Mexico, it's still there. People are getting vaccinated in Mexico, and we're working through that stuff. But ultimately, with what the governments are doing and what we're spending, we're going to see higher silver and gold prices. Maybe it's not in the next 2 months or 3 months, but it's coming. We want to be in a position to take advantage of that.
Fantastic. Thank you very much, Dan. It was a great presentation and good to have you here on board and answering all the questions. Yeah, the only thing what I can say, well done. And we look forward then to your project finance and the final kickoff before Christmas, please, so that you guys really can start with the construction and bring this thing then online because we need it. Yeah, definitely. Solar, e-mobility, we need the silver.
Well, thank you. Thanks for your time and much appreciated. It's nice seeing you again.
Nice seeing you, Dan. Thank you very much. Yeah, ladies and gentlemen, that was Dan Dickson, the CEO of Endeavour Silver, and you heard it. Finally, the feasibility study for Terronera is there. The numbers look terrific, even at lower prices, of course, in the base case. But if we use spot prices of today, it looks absolutely more terrific than it does already. But I think this the most important thing is really that this can be built, this can be constructed. This is not like a $500 million thing. This is $175 million. Absolutely doable for Endeavour Silver. No doubt, as the company is almost debt free because they have like some $5 to $10 million in leases, and that's it with a lot of cash. And that's exactly what we like. So there is no risk in the company. They get a project finance for sure at low interest. And then let's go full throttle. And 2024, they're going to double their production and half the costs. That's exactly how we want it. Silver and gold is for sure a very good investment, and Endeavour Silver also. Thanks for watching us, and bye-bye from Switzerland.